problem. Welcome everyone to Wealth Press Roundtable Live. So today, of course, I'm Laura Catton with the Wealth Press editorial team. Francisco Bermea, he's the guy handling the chat for us, doing all the technical stuff. There he is.
Morning.
He's our editorial director. He's hiding. Today we have Roger Scott, Jeff Zananeri, and a special guest. We have Don Yoakum as our special guest today. So Don, I'm going to do an intro for you and correct me if I get anything wrong.
Okay.
So Don has a varied financial background, working everywhere from the CBOE, stressful, to investment banks, to PIMCO, to having your own investment advisory firm. Along the way, you've mastered options, stocks, bonds, and derivative trading, and still managed to make time to obtain both an MBA and a CFA designation. He has an excellent blog, you guys, to help everyday investors navigate the markets and identify opportunities. It's at prosperitypub.com. Welcome, Don. Did I get anything wrong?
Close enough, That seems pretty good. I like to hear master in front of anything, that's
Well, we're delighted you could join us today. Don's here in Maryland too. So we have two Floridians and two Marylanders in the house. Yeah. Go Ravens. So let's get started. We have so much conflicting news all over the place lately. So I wanted to talk about a few things. Household debt rose at the fastest pace in 15 years. They say largely due to hefty increases in credit card usage, including for mortgage balances. Add to that, we just heard that 37% of real estate agents couldn't pay their office rent in October. How's that for grim? Yet, on the other hand, we have the Producer Price Index, the PPI, that measures the change in the price of goods sold by manufacturers, of course. It came in at 0.2% month over month, better than the anticipated figure of 0.4%. So, Jeff, I'm going to ask you first. Do you think the worst is behind us in terms of inflation? What do you reckon?
That's an interesting question. Headline inflation, yes. Do I believe that the gains in prices are going to regress? I do not, which is going to continue to be a systemic problem. But I think the market is going to start to move on from the sticker shock of inflation as we've been kind of numb. The one caveat would be if the energy crisis gets a lot worse, which it obviously still could.
Yeah.
And energy prices go a lot higher. We'll get a second round.
Already feeling that pain in Europe. How about you, Roger? What do you think?
I believe that we're going to starting to see the, I don't think the worst is behind us, but I think the worst overall. How can I explain this in a way that'll give me a little bit of a hedge? I don't think the market's ready to really move in the right direction, which is higher, but I think the market is starting to assimilate that the worst is closer than we thought. That's kind of the way I'm looking at it, because the market always appraises everything ahead of time. And I think in this particular situation, the market sees that, well, the downside may not be as bad as we thought, but at the same time, the upside may not be here for a while longer. I think that's kind of where the market, I think that's where the sentiment is shifting. It's not, oh my God, we're going to drop another 50%. But at the same time, people are starting to understand that we may be sticking around these levels for quite some time.
Do you agree, Don?
Yeah, I think in general, I definitely we're in a sideways a transition, but not a full transition. So I'm going to use a couple analogies. One is the inflation wave has washed ashore and now is receding, and now we get the recessionary wave, right? They're starting to price in the effects of the Fed, or not price in, but they're starting to you're starting to feel the effects of the Fed hikes, right? So now recession, and that is more front and center than the inflationary fears. But here's my second analogy. It's like, imagine it was a campfire that got a little out of control, and, you doused it with water and packed up your stuff and left. Well, it's still sitting there smoldering, right? Inflation has not been solved. The long-term, if they back off, right? If they just kind of say, okay, this is good. Oh my God, terminal rate, 5%, whatever. Whew. And then they start worrying about the recessionary thing. You still got this smoldering fire. You still have a lot of excess cash, a lot of cash that was generated that banks, can move off their balance sheets. There's a tremendous amount of excess reserves. You still have the money problem. It's not just related directly to oil, although that, in oil and emergencies, those kind of exogenous risks, it's an endemic thing. And these loans, taking out credit card debt in order to make up for the effects of recession, are actually, those are things that can spark money velocity, right? You've got wage pressure, and if money velocity picks up on this still a very large pile of cash at tender, that's when it can flame back up. And if they ease up on the gas or back down, or, start cut, oh my God, we're at 5% rates, now we can cut, right? That's still a long-term problem. But right now, the most immediate thing is recession. And I think, you see it in the markets, and we're churning sideways. I think we might be here for just a little bit longer. We could go a little bit higher. I got like 4150 on the S&P, but the downside is all still there. And we can talk about all the rest of it, but that's generally the thing. I think there's still plenty of room to the downside, because there's things that can still blow up, or go wrong or break.
Yeah, very true. And then when you also look at the conflicting numbers, let's talk about retail earnings. So Lowe's and Home Depot, of course, beat expectations, but maybe that's because nobody's buying a new house. So they're kind of taking care of their own homes. Walmart beat expectations, but then Target and Best Buy missed. And we're seeing, like we said, credit card balances collectively rose more than 15% over the same period in 2021. That's the largest annual jump in more than 20 years. So will consumer demand stay strong, or is the pain lagging? Roger, do you want to talk about that first?
Sure. I think that I think that what we've seen in the last couple of weeks, based on the CPI and the PPI and this market rally, I think people are getting a little bit ahead of themselves. I think that based on what we're seeing right now, just this morning, what we saw with Target, what we saw with Carnival, we are far, far, far away from the sailing into the pretty rainbow and all of that. We're nowhere near there. One or two good reports is not going to get us out of this environment. Matter of fact, things are just getting worse globally. China looks like they're having another COVID lockdown. So I think it's going to be a rough ride. What I'm seeing is the market coming back down and undoing much of what it did. I'm looking at the Dow to come back to about 30,000. Again, I don't think we're going to be in a position where I think the data that's coming in is promising, and it's giving people hope that, again, the worst may be behind us. But again, it didn't take us 2 weeks to get into this mess. It took us a long time. And just like it took us a couple of years to really get into it, it's going to take us some time to get out of it. I'm anticipating, and what I'm doing is I'm looking at when earnings estimates are expecting to start coming back up. If you look at most analysts, most estimates, they're realistically looking to start moving in the right direction after the first half of 2023 is over. So I'm looking sometimes maybe March, maybe June of next year for when the earnings estimates are legitimately bona fide going to start moving in the right direction. And I think that's going to start moving the market the right way. Till I see earnings moving in the right direction, these rallies are all setups for a bear market. I mean, these are all perfect opportunities for shorts. And I think the market's going to undo everything that it did positively in the last 2 weeks. It's going to erase all of it in the next month or so, maybe even less. Today was a good, sorry, just one more thing.
Go ahead.
I think today was actually a really good example of that, because we had retail sales data come out better than expected, and the market did not react positively to it. So I think the market is starting to, I think that vacation that we saw with the CPI and the PPI, that's all starting to fizzle out, and reality starting to settle in. That's kind of where I'm going.
You think these are bear market rallies? This is not a bull market indicator in any
Not
way.
even, when you said 37% of realtors can't pay rent, and earlier this month we found out that over 30% of people couldn't afford. I mean, the economy. We just learned that Amazon is laying people off, Microsoft is laying people off, Meta, if you want to call it Meta, is laying people off. This is not a time. This is not a time where things are getting. these companies take a huge, it's very, very expensive for these companies to vet and hire new talent. And the last thing they want to do is get rid of talent. And there's a lot of talent right now without a home. So this is not the environment. Also, just FYI, while we're on this topic, I was very, very hot, and I'm going somewhere with this, and it's actually really relevant to what you're talking about. But I was reading about AMD yesterday, how AMD is becoming a really great company, but they're not doing well. Why? Because they put all their efforts into the home computing, and right now, home computers, personal computers are sitting on the shelves. People are not buying them. So again, you have a company doing great things, making great discoveries, just blowing everybody out of the water, but the industry is not moving. So what are they going to do? You know, they could be the best in the industry, but the industry is not moving. So we're seeing a lot of that. And I don't want to sound like a bear, because I'm really not a bearish. I'm not a perma bear. I'm a lot more bullish than bearish, but I'm just being realistic. This is not a time to be celebrating and partying and saying the worst is behind us. Ooh, let's go out there and buy some Russell 2000. That's not the time for this right now.
I feel you on that. So Don, what do you think? Do you think we're not going to see strong consumer demand? Do you think it's going to slide like the CEO of Target's saying for the holiday season? And do you think we're in a bear market rally, or do you see any bullish indicators?
Yeah, I think we're in a bear market rally. I think that some of these numbers. Yeah, it was interesting. I read something. The California. So there's stimmy checks going out on the state level, right? So California has stimulus checks. It's a huge economy. Read how that contributed to the stronger retail sales. Whether it does or not, we may see those sorts of things, but we are. These numbers are going to turn more decidedly. I think there will be less of these mixed signals. Mixed signals are not unusual. You get these times, but I think it's overall this is a bear market rally. The consumer spending is going to follow. It's on its way and working it through right now, and all of this is going to be pretty clear by the end of the year.
Yeah.
Yeah.
What about you, Jeff? Anything to add there? Your thoughts?
I have thoughts.
Give me your thoughts, Jeff.
It's a bear market rally. I've been telling you it's a bear market since the beginning of the year. Don touched on something incredibly important earlier. We're moving on from the phase of inflation is the boogeyman to the actual economy sucks is reality is the boogeyman. So we had this perception where you would get economic numbers coming out where if they sucked, people would buy stocks because they were like, oh, great, these guys are going to stop raising rates. But they didn't stop raising rates. They took them into the sky. Mortgages are above 6%. People are the big part of the equation that we really have to focus on is all these people that are financing their rent on their credit card are paying like 35% interest once their introductory rate goes away. And so the house of cards that we're sitting on are starting to really come down. And we had this crypto thing. I know maybe you want to talk about it later. Maybe you didn't. I told the story last week, but that's just all symbolic of what's at stake here right now. So people are saying we're entering a new bull market. We're just starting to really enter the actual recession, which we don't know how bad it's going to get. So I think people that are saying we're going to start a bull market as we're beginning the recession have never actually been in a recession or just started trading.
If they weren't aware of where they were when they were in it.
That's right. That's right. They haven't been through like look at us three. Like we've been through some wars, right? We've been through some serious market meltdowns, recessions. There's a playbook to this whole thing. Some of the young bucks in our company, they're like, oh, people are blaming people for the crypto thing. Isn't that lame? And I'm like, you know what happened in 2008? Everybody sued the bank for forcing them to buy the house that they couldn't afford because they lied on their own application, talking about a job they didn't have for a house they couldn't afford. And they wanted to blame the man, and they wanted a check back, and they wanted a mulligan. Yeah. And that's the American way. And we haven't even gotten to that part yet of the equation.
So in crypto, this is the result of everybody over the last 5 years saying we need to get more acceptance in crypto. We need to build these things so people can get in it. And I'm sitting there saying, no, leave them out.
That's what I've been saying, Don. I've been saying exactly the same thing.
Yeah. But so the bodies are just starting to float to the surface, right?
Yeah.
And people are in pain. That's why everybody's pissed. Everyone's pissed because they're in pain. They're losing money in places they didn't think that they would lose money, and they didn't think they would take 100% loss on something that they're taking 100%. They didn't think a stock like Nvidia could have a 70% downside move. They didn't see that, right? So people didn't have that priced in, and earnings that people are making are just starting to come under pressure. But this target thing isn't surprising to me at all. Anybody who's traded with me, watch me. I made 800% on a target put 2 months ago. I've been playing this move. We're not in it now, but there's a lot of downside. On Monday morning, I had to crush the open. I was showing a chart. I said, we just came back to the top end of the range. Playing earnings, you got to look at the range. How much more upside do you have versus the downside? So I think everyone needs to do that with the stocks that they have. Where are we in the range? What's my risk reward? Do I think I'm going back to all-time highs versus all-time lows here? Because it's a 50-50 bet.
Right.
I'll give you 50-50 odds to anybody watching this show that wants to give me the downside versus the upside, because I think the probability of new lows is higher than the probability of new highs. So I want to try to, talk to people about thinking in probabilistic terms rather than emotional terms, rather than my guy won or my congresswoman's the best, or, Santa Claus is going to save my ass this year. I want people to think in terms of like, am I risking $1 to make $2, or am I risking $3 to make 50 cents?
Asymmetrical payoffs. That's what you should be thinking all the time.
Exactly.
So Jeff, do you think we're going to see a new low this year?
I mean, we're getting close to the end of the year, so maybe not this year, maybe January, February, but I think we're certainly going to be closer to those numbers than we are above the recent range highs. I do, specifically on the NASDAQ. I mean, so Micron came out this morning. They had more bad news for semis. Semis had a tremendous run in the last 30 days. A lot of semi stocks. The SMH was up 30% on nothing other than technicals and a little bit of short squeeze. So you're going to have Nvidia come out tonight. You're going to have AMAT come out tomorrow. People aren't buying computers. People aren't buying new telephones. I've had this phone for 2 years. Back in the day, I'd probably like time to get a new one. I'm looking at this thing like, this thing is perfect, baby. Pictures are tremendous. Videos are unbelievable. Yeah, my apps are a little bit laggy, but I got a lot of BS apps on this thing anyways. I don't need to get a new one, but that's a problem for tech, because we as a consumer society have been brainwashed into thinking we need a new one of these every 24 months. I think people are going to hold on to them for 36 months, 38 months, 40 months. That changes the entire equation for all these companies.
And Jeff, that's actually one of the things I was talking about in my VIP room yesterday in regards to that AMD story that I was talking about. Consumers are in fact keeping their tech longer now because they're better made, they're faster, people just don't need the speed. And yeah, it's very, very true. And that's having a major impact. Aside from all that stuff that we're seeing, that's also a factor that people are just not replacing. I mean, after a certain point, okay, so it's like this much faster, it's this much slower. It's just, it doesn't matter anymore. So that's a big factor with not just smartphones, with all consumer electronics. That was part of that AMD story too. That's one of the reasons they're struggling right now. So that is very, 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 very true and very relevant right now.
Jeff, you mentioned the upcoming earnings reports. Are there particular ones that are you especially zeroing in on? NVIDIA, Cisco?
I think NVIDIA is huge. I think NVIDIA has been kind of a proponent of a lot of like squeeze, a lot of the NASDAQ squeeze that we've been seeing. And they've already, so this is the game. Everybody knows the game that's being played on Wall Street is remove anybody's hope for anywhere close to a decent earnings, right? So everybody's like, oh, Home Depot, and Roger talks about this a lot, keeping it in perspective. Just because you're a little bit better than like really bombed out estimate doesn't mean you had a good quarter, right? Think about what you made last year. Think about what you made the year before. The problem with semis is these stocks have run and they've all guided lower. And I expect them to miss their lower guidance. I expect it, like Target is a perfect case. Target has told the market, we're not going to make good money. They didn't make good money. They had huge inventories that they haven't dealt with. And then what really hurt the stock was when the CEO came out this morning and said, I think it's going to be a lot softer a holiday than people expect. When he says that, he's not just talking about his own execution issues as an operator. He's talking about the economy. And the economy in this country depends on retail Black Friday to hum. We just do.
Yeah. So Don,
Yeah.
I'm gonna, oh, go ahead, Roger. You want to say something?
I just wanted to say that's going to spill, and that's going to spill over to outside of, just so everybody's clear, we've been kind of talking about it, how it's impacting tech and other things, but I think it's going to have a very wide consumer impact. Hotels, travel, all consumer things, not just technology. Just want to be clear.
No, I think that's an excellent point to make. So do you think we're going to have another low before the end of the year, this year?
Are you asking me?
I am.
I think about that all the time. I'm not so sure if we're going to make another low, or if we're, I want to, do you mind if I share my screen real quick?
Not at all. I love when you share your screen.
I want to show you what I'm seeing. And I think this will kind of give you an understanding of what I'm looking at right here. So here's kind of what I think is going to happen. So this is the ARC fund. I don't recommend this to anybody. Don't like this. Don't want this. But it's a great graph. If you look at the ARC fund, we peaked out almost a year before the broad market did, and it looks like we're consolidating now. And these are smaller caps. Smaller caps are usually the first ones to go down and the first ones to go up because they're highly speculative. So what I'm thinking we may see, and by the way, if you notice, we didn't really have a major rally here like we did in the Dow Jones. And again, I don't want to dominate this conversation. I'll be done with this in a second. But if you see here, the Dow Jones, the large caps, they went all the way up to the 200-day moving average, actually a little bit above, and the SPY did too. But if you look at the small caps, you'll notice, if you look at we stopped just short of hitting that 200-day moving average and started kind of coming down, kind of like we did right here. But if you look at the ARC, you will see that we kind of just went down and we've been really just going sideways. Now, I said in May that I believe the small caps have bottomed out. I wasn't really right. I was wrong because we kind of made a little lower here, but by like 1.5 points. So I'm not exactly sure if we're going to go lower or not. But what I'm pretty confident in, Laura, is that the larger stocks are going to start seeing this type of a trading action. So low here, low here. I think the broad low is almost there. In other words, I don't think we're going to drop another leg and drop another 30%. I don't think we're there. But I think we could be in an environment where we kind of could be going 30,000, maybe going down to, let me just kind of show it to you on the Dow. I think that there's a really good chance, a really, really, really good chance that we're going to come back down here to the 30,000, 29,000 level and kind of just stick around here. So I don't know. So I can't answer the question with any degree of certainty of whether we've made the low. But in terms of whether we're going to go back to the area we've been previously, I think the odds of that are like 98.5%. So again, I'm very careful with the lows and that kind of a talk because it's very hard to time lows. But the fact that we're going to come back down and erase most of this, I'm as confident can be in that.
Oops, here we go. Couldn't get my mute off. So Don, how about you? What are your feelings about, are we going to see a new low? Do you think we'll continue sideways? What are your thoughts?
I mean, we could, I think, maybe we grind sideways here a little bit. I'm just looking for it to show up, in volume, or the way that I look at volume. So it's, I think that, I'm just going to wait and see. Right. But it certainly could. Jesus Christ. Yesterday, we just had a rocket hit somewhere in Poland. And I mean, that kind of stuff can be, so you've got these crazy exogenous stuff, and then you've just got this realization the market can wake up any single day. So we've got blow-ups going up in crypto, and the big question is, that actually results in any kind of contagion. Okay. Then you've got what's going on in Europe and how that affects both the banking system, and can that result in contagion. Then you've got the actual economic situation in the US, and if that starts, which I don't expect to kind of wake up and hear Bear Stearns had to say no thanks on any more calls for his prime brokerage business, right? I don't expect that in the US, but that can happen anywhere. and spread. It's just, there's just too many of these exogenous, and then maybe just the market wakes up one day and says, oh yeah, no, we really are in a recession. This stuff hurts. Free money is no longer with us. This is the cost. That all of those things can happen every single morning, you know, that you wake up, and that could take us immediately. We haven't had a limit down day yet. Do you guys remember the limit down days back in 2007? I mean, they're wonderful if you're on the right side of them, right? But a limit down day is a limit down day, and you can have 2 or 3 of those, right? That's how you flush the system. And we're nowhere close to that, and that can happen at any time. So beats me, but I'm certainly not ruling it out.
So Don, you're new to us. I don't know that much about how you place your trades in markets. Tell me what strategies you use in times like these.
Yeah, you bet. And thank you for asking. I'm teeing up, trying to teach people how to utilize this method. I get a lot of requests from my the folks in my Prosperity Pub channel and all that Telegram channel and all that stuff like that. So yeah, let me talk about that just a little bit. And it is called the volume profile. Here we go. Everybody see that?
Yes.
Yeah. Okay. So that's now those of you, and I know there's a lot of people on here that you know, are also part of my service and that sort of thing, and you guys are getting to be very familiar about it, and they're actually you know, they love learning about it. So this is something that we tried to expand and expand the net on it a little bit and get it out there so people can understand this. It's a very different way of looking at the market. So I'll just tee it up by saying, since discovering volume profile, you know, probably, you know, I started using a very similar thing to volume profile. It's called the market profile back in 93, 94, when I was on the board of trade. I'd show up at 4:30 in the morning. This old trader wanted me to help him put out his market letter to clients every day. And we were trading commodities and, you know, basically futures markets. And he used a market profile, and I sat down with him, learning it and helping him write his letter so that he could get that out to clients for the day. And that evolved over time to the volume profile. You know, it's like, you know, earnings. I'm not really looking at individual companies for earnings. I'm not targeting. What I do is I run scans that show me that might be something worth looking at. And then I look at the volume profile and tell me if there's an opportunity, right? You know, sometimes they turn up some pretty amazing trades. We had a 53% overnight gain on Bank of America. We just, and some, you know, we had to rush to get in on those, but that was a beautiful trade. We made an 82% gain on FPI. I mean, even names that you never hear of, you just, you know, you got to kind of do a little bit of digging to find out what they're about. All of this action shows up in the volume profile, right? So instead of, you know, most people are used to looking at volume along the bottom, you know, broken down by day. Well, so instead of looking at volume over time, I look at volume across price, and then it creates and you can create this histogram that you're seeing on the right-hand side, and that's what I use. So 82% there, used it on to trade Bitcoin. I've been using it very effectively in Bitcoin since the beginning of the year. BITO is an ETF on Bitcoin, and we got 160% in 12 days on Bitcoin. So it's been a very effective tool, but, you know, of course, it's not a fail-safe, foolproof signal, right? You can't guarantee all those. You can't guarantee that you're going to make money like that all the time. You know, I've got like a 54% win rate on my picks, but with that, we've taken way more out of the wins than we have out of losses. So far this year, we've had, out of 147 trades, there have been 80 winners. Okay, so not batting 1,000 by any means, but it depends on what you get out of it, right? What do you take out of the trades that you get right? And since, you know, I've started really leaning into this process back in December. If you had $2,000 in the product or in these trades, that would have grown to over 29,000. It's something like a 14 or 15x so far this year. A lot of it has been due to getting the bear market right and being short starting back in December. But I've traded both sides of the markets, and you know, I've been sharing it in my Prosperity Pub Telegram channel. You know, with it between free picks and what I'm doing and in the services. there's been a very, very positive response from all the members, right? He called me a legend among my peers, but I don't know. I feel like I'm along pretty good peers, but I like that. Somebody else Sophie opened a trade at 33 cents and now out at 85. She is also a part of learning how to do this. She's joined. John closed out half of his position at over 100%. We've just had a remarkable response from everybody that's been participating in this. And so what I want to do is I wanted to get on here and talk to you guys this Friday. I'm going to be teaching a volume profile class. I want you guys to learn how to do it. I want you to learn the system. So this Friday for $9, we're having a live interactive class. It's Q&A. If any of you guys have been on my bring your own stock sessions or sizzle stock sessions, it's something I do. I live stream just on the fly. Bring your stocks, or we'll go through my scan and we just review the volume profile and look for opportunities. And then a lot of people just love that because they get a ton of picks just right there, and we just do it all the time. Well, now I'm turning this into a class. We need to kind of take this and make it a little bit more formal instead of me just doing it on the fly all the time. And here is an opportunity for everybody to get in on it, right? So we've got this volume profile coming up, and you go to prosperitypub.com. Do it. We're doing it tomorrow, right? What is today? Thursday?
No, today's Wednesday.
Oh, today's Wednesday. Oh my God. Okay. So in 2 days, thank you very much. 2 days. You guys got the numbers. You see it. I'm sure they've dropped something down in the chat for you to join, but I would love for everybody to be there.
That's wonderful.
Yeah.
And that's
It's going to be a lot of fun.
3 p.m. Eastern on Friday, right?
Yes.
For $9. That's wonderful.
It's a great deal to learn how to do volume profiling for $9. It really is a great deal. I'm going to be there. I'm going to check it out, and Don will even show you how you could. Are you going to show them how to set something up on their Thinkorswim platform, Don?
Yeah, absolutely. We can do all that. And we've got settings, we've got videos. We're going to share all that stuff. I'll show people how to set it up real quick. And then they can follow along. A lot of times it's just going through, and there's some intuition to this, right? So this isn't like a lot of technical indicators where you get a signal and then or you get a couple different confirming things. You're reading into it about what's going on in the underlying market, right? And this workshop will give you a sense of how I do that. And if you come away saying, okay, I get that this is something that I can incorporate into my trading, then it'll be worth it. And Roger, I'd love to have you there, man. It's great. That'd be awesome.
It's gonna be fun. I want to learn more about volume profiling this way. It's pretty cool. It's been something I've always been interested in, but it's something I've never really picked up on. So it's going to be great. Question for you. They could set up a chart and they don't need to have Thinkorswim, right? They can do it in a different platform as well, right? Almost every platform has that view, right? That special.
That's right. Yeah.
Sideways
Volume profile it's now a pretty standard study.
Right.
And there's also, like some websites that are dedicated to it. You can Google volume profile and you for cheap money, it just gives you you just get volume profiles on stocks. So yeah, there's lots of ways to get a volume profile to put it to use.
Yeah, I was just telling people how they can download TradingView and they can actually do it at no cost because TradingView doesn't charge you. So if you want to, just a little tip for you guys. So if you don't have Thinkorswim, don't get discouraged. You could do it on other platforms. Almost every platform has volume profiling page, and Don will show it to you. It's very, very cool. I always, I was not a candlestick expert. I started listening others and back testing, and that's how you guys learn. The day you think you know everything, that's the day you're done. Like Jeff, myself, Don, we always learn from, we got it. That's how it works. We learn from each other. That's why we have a network like this. So definitely take him up on this. It's not day trading. It's not day trading. It's more swing trading, from what I understand. Am I correct, Don? I don't want to speak.
I think so. The swing trading,
trading.
Since I got into this side of the business, I'm not sure what swing trading is, but I think everybody seems to come away with that. That's the way it feels. So sometimes it's, but it's not always reversal, right? It's definitely initiating action. A volume profile really helps you see whether or not a market is searching for a new level or just gotten too far away from the middle. So it's both. It's both, right? So, but there are opportunities and setups that are mean reverting for sure.
Yeah, and that's actually the reason why I want to get into it a little more, because it's very mean reverting, and I'm all over mean revert. That's like my bread and butter trading methodology.
You can absolutely use it to look specifically for stocks that are, well within a mean, right? So, and it's beautiful. Something like IBM, you can look to 5 years for what that range is, right?
Right.
Other ones, they develop over months, and until something new comes up, they're going to trade in that range. But that the very heart of volume profiles is this point of control, which is the highest volume center. And for stocks that are range bound, it's a beautiful tool to help you pick that.
What time is it happening on Friday?
3
3
p.m.
p.m.
3 p.m. Eastern.
Perfect.
So join.
Perfect.
I love it,
Folks. You have no excuse. 3 o'clock Friday sounds like a really good time. That sounds like perfect time to do something like this. You're all burned out from your work week.
100%.
Join Don. Go to Prosperity Pub. There's a link right there. It's going to be the best $9 you spend. I mean, $9 you can hardly get a Starbucks these days. So do it now, folks. Join. There's nothing to think about here.
That's right.
Prosperity
If you want to
Pub.
do it with a beer in your hand, do it. It's a good place. It's a good place to drink a beer and watch and listen and learn.
Early happy hour, 3 p.m. on Friday.
Oh, that early? Oh, okay, sure. It's early.
I knew I liked you, Don. So prosperitypub.com backslash vol for volume. Thank you so much. It's been a real pleasure getting to know you, Don. And of course, Roger and Jeff, always good to see you guys. A couple of quick housekeeping notes. There will be no Crush the Open on Monday. The guys are traveling for Thanksgiving, so no Crush the Open. Next week for Roundtable, we'll be joined by Roger Scott, Garrett Baldwin, and special guest Celeste Lindman. So that's really exciting. She's taking a step away from Ask the Pros, coming on Roundtable next week. So thank you again, everyone. Don, I'm really looking forward to the class on Friday. Thank you for sharing that with us.
Thank you all.
And
appreciate the invite.
have a great time, everybody.
Have a great
See
holiday,
ya.
everyone.
Take care,
Bye, guys.
Thank
Bye,
you for
Don.
having
Bye,
me.
Jeff.
Adios.
Bye,
See you
Laura.
guys.
Take care, guys. Bye.
Thanks all.
Bye. I'm going to leave the room open for a couple more seconds so everybody can click on that link if they want to get more information. It's $9. It's a great deal. And on that page, you can see everything you get. A lot of people were asking if it's going to be recorded. I imagine so. If you go ahead and buy now, the class will probably be recorded on Friday and in the members area.
Yes,
Right.
it definitely will be. And it's going to be a great class. I'm looking forward. I'm going to be there with my notepad and piece of paper taking notes, just like the rest of you guys. So don't miss out. It's going to be a great, great session. Bye, everyone.
Bye, Roger.
Bye, Roger. It was
Bye,
really
Francisco.
great
Bye,
having
guys.
Donna. See ya. I really liked hearing what Don had to say. I think we have to have him
Don is
back.
Don's a great guy. We got to have him on. He's always on Ask the Pros on Fridays, and he's always got some really good tips. We definitely want to have him on the show more.
Excellent. All right. Thank you all for joining us. See
Bye,
you
take
next
care,
week.
Laura. Thanks, everyone.
Bye, Francisco. Bye, you guys.